Welcome and thank you for taking the time to attend our webinar today. I'd like to hope that this will be our only webinar in respect of the lockdown for this year. So we thought it was important that we should have one, considering, I guess, whilst we have been in lockdown in New South Wales for 3 to 4 weeks now, it appears that with the case numbers increasing, things appear to be worsening, and it may turn out that the lockdown is longer than we expect, and at least that there'll be a lasting period of restrictions, probably more than the next few weeks, but I guess we will see. Obviously, there's a significant number of businesses that have been greatly impacted by the lockdown, especially in hospitality, retail, tourism, and a number of other industries. And obviously now, as you've heard, construction, although looks like some construction may go back next week, but definitely the week after. And obviously, as you're well aware, walking down the local high streets where you live, many businesses have been forced to close due to health orders. And that's obviously putting significant pressure on the directors and management of those companies. And obviously, there's obviously directors and managers of other businesses that are still operating that would be concerned, where they currently find themselves. Our webinar today will provide, with our perspective on how to navigate through these difficult times, and also, kind of understand some tricks to deal with certain issues, especially, if cash flow is tight. And probably more important than last year, given the uncertainty around what government stimulus is coming and could be coming in the future, depending on where we get to. So I'll just hold there and just thought we would ask everyone who's on the webinar a polling question, just to see where you think when the lockdown could end, if it will be in the next 2 weeks or significantly later. Okay, so the results are in. The majority of people are probably taking a pessimistic view or conservative view, and they think that the lockdown probably ends at the end of August, 42%, and some even more sceptical, could be September onwards. So the agenda today for the webinar, we have Nick Noonan, who is a executive lawyer and director at Williams James Lawyers. Nick is an experienced employment lawyer, and his practice covers all aspects of employment law, and his clients are from a wide range of law and employers, and also senior executives. Nick will present to us on just some issues around the stand down and other issues around employment law during this lockdown, and obviously the industry causes. Then Peter Bardos, who is a director in our HLB corporate tax advisory team. Pete has over 12 years experience in the area, and he works with a wide range of our corporate clients in respect of a range of tax matters. Pete will work through, I guess, the government support that's currently available, or at least what we know about at the state and federal level. And probably, I'm sure many of you have scratched your heads about how exactly you're meant to access and whether or not you're actually eligible for it. So Pete will hopefully give you some clarity around those issues so you can quickly access that support if you need it. And finally, David Walter and Todd Gammel will take you through some of the ways that businesses can manage their affairs through the uncertainty created through this lockdown process. So David is a partner at Allen & Overy, the Asia Pacific Restructuring division, and David has extensive experience advising a range of stakeholders in formal restructures and formal insolvencies, which include public companies and their boards, private equity, and a number of other lenders and also insolvency practitioners. And finally, but not least, Todd Gammel, who is a partner in the risk and restructuring area at HLB. Todd is a highly experienced restructuring insolvency practitioner with over 23 years experience. And he has a lot of experience across property, construction, retail, hospitality, transport, and mining industries. So without further ado, I'll hand it over to Nick, who will take us through some of the current employment issues that businesses are facing during lockdown.
Thanks, Matt. $300 million a day. I'm sure that was the figure that the Treasurer mentioned this morning as the cost to the economy each day of the lockdown. Correct me if I'm wrong, I'm sure that was the figure that I heard. So the sooner obviously we get out of this, the better, both economically and probably for the domestic sanity of all of us, including those of us that are homeschooling their kids. Yeah, this second lockdown has a bit of a Groundhog Day feel about it for us New South Wales residents. You know, the first lockdown probably had a bit of a novelty value to it, but clearly we're all feeling the strain. What I'm hoping to deal with today in about 10 minutes is just touch upon some of the employment law issues that are again coming to the fore when governments, state and federal, are issuing directives, issuing public health orders on what feels like an almost daily basis, shutting businesses down, modifying, limiting movement of individuals, which clearly affects businesses. There's just a myriad of issues to be across, and even someone like myself that's got my head in it 24 hours a day needs to be constantly into the details. So if you're feeling a bit overwhelmed by it, you're in good company. So just to wind back a little bit, the genesis of how we got here as far as the employment matters. When COVID 1.0 hit, we didn't have JobKeeper. You know, we've got the Fair Work Act, which is a sort of statute that deals with employment matters. That has very limited provisions in it about standing down staff. We then hit the JobKeeper phase, which both gave us a wage subsidy for eligible businesses, but also addressed some of the inflexibility with the legislation and enabled employers to reduce employee hours, not all of their hours in all cases, but some of their hours, enabled businesses to modify duties, locations of work, basically gave a lot of flexibility for businesses. Now JobKeeper's gone, that finished in March. We sort of thought we were out of COVID, now we're back in it, but we don't have JobKeeper. So we're back in sort of the inflexible Fair Work Act provisions again. But I read today, and I think there's a real possibility that even though the JobKeeper wage subsidy scheme won't return, I would not be surprised if the employment legislation was amended again to include greater flexibility for businesses and employers to look at limiting employee hours and varying their duties and varying their locations to give them that flexibility without the risk of liability. So I think that's probably likely when Parliament resumes in August. So I'm going to touch briefly on some of the public health orders, leave and stand down. And then just to finish, I don't want to steal Peter's thunder, but just touch on some of the government stimulus, particularly how it affects some of the employee matters. So just starting with the public health orders, what I'll say about that is read the order, not the press release. Every day there's a press conference. I'm still scratching my head as to why these press conferences need to be daily, but they are. There's a lot of information that's released in these press conferences. They're usually converted into press releases, and then the public health orders, which are really the legislation that give effect to these directives, are made. And they're often updated. They're often updated overnight. So if you're wanting some guidance about your business and the impact of some of these press conferences on your business, get some advice, go to the public health orders. A good example was over the weekend on Saturday when Gladys announced that, you know, individuals in those 3 LGAs would not be able to leave for work unless they did specified things, which in the announcement was healthcare and emergency care. Once the public health order came out the next day, it was actually much broader. There was a list of authorised categories of workers, the types of work that they could do, the types of businesses they could work in. So it was actually materially different to the press release. Working from home is entrenched in the public health order. Essentially, there's a $10,000 fine for businesses that don't permit their employees to work from home unless it's not reasonably practicable for them to work at home. That's a bit of a lawyer's word or lawyer's language, and it's ambiguous. There's no sort of strict black and black and white rules about what that means, but clearly it can vary from business to business and from day to day. Like, take my business, a law firm, there might be circumstances where my staff need to attend the office for a particular matter because it's not reasonably practicable for them to do that at home, and that would be an available exemption. Construction obviously is in the news. I was interested in the public health order wording around some of the exemptions available for urgent work. They were also modified, and not surprisingly, there are a lot of businesses, particular smaller operators, that are probably trying to fit their work within some of those exemptions. It was mentioned in the opening that there's an expectation that some construction might start next week. Gladys has gone on the record and said 31st there will be work. I've heard that there's a lot of negotiation going on behind the scenes to try and ensure that there's some COVID safe available work that can be done next week. So I guess that's a watch this space. The public health orders also mandate certain businesses needing to shut or operate at a reduced capacity, which sort of feeds into the next area that I'm going to talk about, which is leave entitlements and stand down. There's a lot of confusion out there, understandably, about the types of statutory leave entitlements available to employees that are affected by COVID or the lockdown, and some of the government stimulus. There's overlap between the two concepts. One is legislative entitlements that employees have always had or have had since COVID started, and some of these new government stimulus that has been enacted in response to the lockdown. So just with some of the more, I guess, peculiar bespoke leave entitlements that relate to COVID, some of your staff might be covered by what are known as modern awards, which are basically industrial instruments that apply to some employees, depending on the nature of their work, like nurses or clerical staff. Some, but not all of the awards, include an unpaid pandemic leave entitlement. And that is for employees that have to self-isolate, quarantine, or affected by some COVID-related public health order, 2 weeks unpaid pandemic leave. If you're a person not subject to one of those awards and you're in that scenario, you're on unpaid leave. But with the unpaid pandemic leave provision, it protects their service, it counts as service, but not available to everyone. Long service leave in New South Wales, they've actually amended the legislation so employees can agree with their employers to take long service leave at short notice. Say if you have to stand down or reduce an employee's hours of work, they may be able to access their their long service leave entitlement. Annual leave also has some tricks to it. You can't necessarily direct, say you want to reduce employees' hours and give them access to their annual leave entitlement or direct them to take annual leave. That can be tricky. Again, if you've got award-related staff, you need to do it only in accordance with the award. Your non-award people, your senior executives, people that are not doing award-related work, you can direct those people to take annual leave if you believe it is reasonable. I would have thought the current circumstances would give you some flexibility to issue those directions. Outside of that, if you're looking at reducing hours, varying remuneration, any changes to terms and conditions, really you should be looking at doing that by agreement. I've got a lot of clients that have had to act at short notice, issuing letters to staff. We need to reduce your hours. We need to modify your duties. We need to change your remuneration. My advice would be try and obtain employee agreement. Appreciate that's not always practical or feasible, but if you can issue a letter, get some form of agreement, even by conduct, that's going to go a long way to protecting you from claims. Which leads me into stand down. Now, as I mentioned at the outset, when JobKeeper came in, we had these quite broad and flexible provisions that enabled companies to reduce employee hours just by a direction, not by agreement. We're affected by COVID. We need to change your hours from 38 a week to 20. We're just going to issue a direction. It was that simple, subject to a few sort of consultation document requirements. It was that simple. At the moment, we don't have that, which means we're back to the Fair Work Act, Section 524. It's a pretty arcane provision, but suddenly became popular with COVID. It basically means that you can stand down staff if the people cannot be usefully employed, and it's because of a reason for for which the employer is not responsible. Now, clearly, a public health order that says this business cannot operate, construction, great example, means yes, you've got a legislative basis to stand down staff, which means you don't need to pay them, and that's protected by legislation. The trick with stand down though is you can't partially stand down staff. So you have to look at your staff, work out who cannot be usefully employed at all, and only stand down those staff. If you want to reduce employee hours, you have to do it by an agreed variation. As I mentioned, I would not be surprised if shortly we will get these JobKeeper flexibility provisions back. But for now, if you're looking at stand downs, just be careful and get some advice, because it's quite narrow and inflexible, the circumstances.
And Nick, will that impact what you're going to be able to access? I'm stealing Peter's thunder as well, in terms of government support as well, if you stand down?
Yeah, it does. So I'll just finish there, and I'll try not to steal Peter's thunder. But with the government stimulus, the relevant ones from my perspective, you've got employee-based stimulus, which is the COVID, crazily they describe both as disaster payments, but one is the COVID disaster payment and the other is the pandemic leave disaster payment. With the COVID disaster payment, which is the newest one, which is an employee stimulus, that's for employees who can't work because of a government directive, i.e. construction shut. The pandemic leave disaster payment is for people that are required to self-isolate or quarantine or caring for someone that's got COVID. With the COVID disaster payment, this applies if you've lost more than 8 hours work or a full day of work, but it has these very peculiar eligibility provisions, one of which is you can't have access to what they call appropriate paid leave entitlements. Now, appropriate paid leave entitlements include sick leave or paid pandemic leave, but don't include annual leave. So to answer your question, Todd, if you've been stood down, you work in construction, you've been stood down either fully or partially, as long as you've lost a day of work, then you are, subject to the other eligibility requirements, entitled to that COVID disaster payment. I've had clients that have had people on reduced hours for 12 months, like tourism clients, and they've been issuing new letters this week just to help their employees with eligibility, basically saying, we're still affected, including by the lockdown. You're still lost more than 8 hours work or a day of work. We'll look to revisit this shortly when we can. PS, here's the link to Service New South Wales, Service Australia. And apparently all of them have been able to get access to funds quickly.
Because part of the eligibility for the business to be able to get the support is also the fact that you can't change your workforce.
Well, that's slightly different. So just to jump to the business grants. So I'm talking about those first two are the employee grants. With the business grant, there's a COVID business support grant and there's a job saver grant. Both of those are about maintain or they are employer grants. And one of the eligibility requirements is maintaining employee headcount as at 13 July, right? And there's a few tricks about how to do that count. Maybe in question time, we can come back to it because I don't want to steal anyone's time. But that is about keeping your headcount as at 13 July.
Thank you, Nick. Very informative. Nick's from Henry William Lawyers. His contact details will be right at the end of the session. So that your thunder isn't stolen, I'd like to welcome Pete, who will take us through some of the government support available and the tricks of I guess accessing that support. Over to you, Pete.
Thanks, Matt, and thanks, Nick, for that helpful information. Look, just with the government support, something that's pretty important to understand, unlike the last time we're in this situation where there was federal government standard support available, this does seem to vary state to state, and I'm covering mainly the New South Wales support that's available. I'll also say that I'm aware there was a Tax Institute presentation over lunchtime that went for an hour and a half. I'm going to do my best to fit in the high level over 5 minutes. So just broadly, the support that's available, I've listed quite a few things here. The main ones that people are talking about, the COVID-19 business grant and the job saver. So quickly, and I will come back to more detail on these two. The COVID-19 business grant is available as a one-off payment. It's meant to support businesses up until the time that the job saver kicks in. So the job saver is an ongoing weekly payment amount, and I'll just get to them in more detail on the next slide. There's also a micro business grant. There's payroll tax relief, and so I should also say we don't have all of the details to these, but payroll tax relief, what's being offered for all employers that are subject to payroll tax is a deferral until the 7th of October for payment of the most recent year, the July and August payroll tax. There's also a reduction of 25% payroll tax for businesses with under 10 mil of payroll that have a 30% reduction of turnover, but we're not sure any more eligibility on that one. There's also a couple income tax concessions which are a hangover, I guess, from previous lockdown and support. An interesting one that I just wanted to remind everyone of, because I'm conscious that these grants have pretty specific requirements and timelines. There's the loss carryback measures. So this is for companies that incur a loss in maybe the 2021 or 2022 tax year, but it actually paid tax in a prior income year. Normally what would happen is that loss would be carried forward into future years. Under this regime, companies can actually claim back tax that they paid in prior years as a refundable offset in the year in which they have that loss. Excuse me. There's also the instant asset write-off, temporary full expensing, I think is its technical term, and we've seen a few companies being pushed into a loss as a result of that, so interesting to see how they can work together. It's a hospitality and tourism grant, which we don't have any information for, but expecting shortly. There's also some relief for landowners and tenants, which have come out. So up to 100% of land tax can be passed through to your tenant if they've experienced a reduction in income. There's also some administrative relief from the tax office. So interest-free late payments and reduced payment plans is what we know, not too much more than that. And then there's been some release from I think it was the Australian Bank Association, including some deferrals of loan repayments.
So Peter, I read all of that is the ATO is going to stand back and just not do anything, and the banks are going to try and not do anything, give everybody a chance to breathe, and work out what's going on.
I think you're right, Todd, and I think the key, which I know you'll cover later, is just communication with those stakeholders. So keep those lines open. Yep. So on the individual side, and I won't dive into this too much, but there's the disaster payment, which is covered before. There's the childcare gap. So if you're in lockdown and your child can't go to childcare, there was an announcement that the gap will be waived. Particular interest since I've got a 1-year-old daughter, but fortunately she's still going to childcare at the moment. And there was the pandemic. I'll just jump into the two big ones, which was the COVID-19 business grant. That's that one-off payment, and the job saver, which is supported by the federal government, and interestingly meant to start from the 26th of July, but we don't really have too much information on the eligibility criteria. But so the business grant is for businesses with 75,000 to 50 mil turnover. Applications are open now, but I just want to make the point that they don't close until the 13th of September. I've heard of people on the phone on hold for 4 hours to Service New South Wales, websites crashing. There's a lot of teething issues, and just beware they don't close until 13 September. So maybe if you don't need the money, just let them sort those out. And this is dependent on either a 30%, 50% or 70% decline in revenue for a minimum of 2 weeks over the period 26 June to 17 July. Interestingly, a few days ago, they've changed that to be 17 July. Previously, it was 26th of July. So there's been a bit of confusion around that. Now, the reason I believe it was changed to 17 July, and perhaps it was a typo in the first place, but is because I'm expecting that job saver decline in revenue turnover to include the period after that. So it's set to kick in from the 18th of July. Again, it's for businesses with a similar turnover. Applications are due to be opened on the 26th of July, and that's between 1,000 to 10,000, calculated as 40% of payroll. That's per week. So how do you get it? Well, the steps: assess the eligibility. Now, that's not easy, but certainly feel free to reach out when you're running through those eligibility criteria. They're the high level, but there's a lot of detail behind there, and I'll go through some tips and tricks on that one. There's an accountant's letter that's required to support the reduction in turnover. The applications through Service New South Wales. I have been told that although there's some teething issues, it's relatively easy. And then receive the payment. So Service New South Wales says that'll be paid within 10 business days, but certainly conscious of the volume they're getting at the moment. So some tips and tricks. There's a highly impacted industry list, and for industries that are on there, really the difference is the threshold of support. There's the turnover is used a couple of times, so the decline in turnover. I think the trick there is cash or accruals. The message is that it's based on however GST is calculated. Interestingly, it says that the turnover has to be a result of the public health order. It's not just because we're having a bad run. There's a nexus there to the public health order, which Nick mentioned before, but basically it's got to have a link to lockdown. I had their maintained headcount. We've covered up on that one. The alternative circumstances. So I didn't cover this, but the decline in revenue is comparing that 26 June, 17 July, a 2-week period within that time frame to 2019. Now, businesses may be affected due to that public health order that went around in 2019. So there is alternative circumstances, but again, the detail's pretty light. I would have thought if you're around in 2020, that's a really good place to start. But really what this is all trying to get at is, have you got reduced turnover because of that public health order? So pick a 2 weeks that's indicative of normal trading conditions. What have we got there? So Service New South Wales review, just to be wary that I'm expecting there will be a significant review program. And interestingly, they say to maintain support for 5 years, and that anyone that receives these funds can be clawed back. So that was a really high level run over, and some tips and tricks there, but please, any questions, shoot them through.
Thank you very much, Pete. Very informative, and there'll be more detail, I guess, surrounding some of the specifics that Pete discussed following this webinar, because obviously there's some quite complex rules and criteria to be followed, and it's in everyone's interest, especially if you have a decline in turnover, to see what you're eligible to access. As I mentioned in my introduction, I will be having a discussion with Todd Gammel of HLB and David Walter on Overy about how businesses can manage the uncertainty that's being created by this lockdown. So I'll start by asking you, Todd, this current lockdown has obviously hit us very quickly. What do you see is, around business confidence, the business conditions in New South Wales going forward in the rest of 2021 and into 2022?
I think right at the moment, there's a lot of the uncertainty is sort of still building up. And I think everybody's looking at the 31st of July as a sort of pivot point to be able to decide whether it's going to become a real issue or whether things will start to be able to go back, particularly for construction industry. Obviously, they are exerting all sorts of pressure at the moment to be able to work through that. It's going to be difficult to assess until we get further into it. My feel is that it will take the economy a period of 2 to 3 months to recover, because it's just it's going to take that time to work back through. Even if we do come out relatively quickly, this will have a malaise and an impact because it's impacted the working capital of the the economy, which means that people haven't been paid on time, so there will be a slower recovery, and we don't have that soft landing of JobKeeper where people were able to keep spending while they were not working. So it may well have a contractive sort of position, but I'm sure David has a view as well.
Yeah, I mean, I'm, as Todd knows full well, no economist, but I can tell you, if you sort of step back from it and just look at, M&A, capital markets, banking and finance deal flow through our practice in Sydney, it remains strong. And I think that really comes down to weight of money considerations. Governments around the world are still cranking plenty of cash into the global financial system. And so I don't expect off the deal flow that we're seeing to see the New South Wales sort of business conditions and confidence kind of crater and bottom out. Todd, what you say makes perfect sense to me around sentiment and trading conditions over the next few months, perhaps through to the end of 2021. But I'm not seeing some kind of GFC style liquidity collapse at all. Not at all.
I think one of the conversations I had today was with one of the guys at the larger firms, and in particular, one of the big four accounting firms are almost at the stage with deal flow where they're turning things away. Unless they are very attractive, they've got too much work.
Yeah. I mean, so for instance, part of the work I do is, more sort of highly levered property acquisition and development funding. And, we kicked off 2 new transactions yesterday of material size for projects in suburban Sydney and Melbourne. And so, obviously I appreciate for a bunch of the people listening and watching today that, actual trading conditions at the moment are horrible in the sense of inability to trade. But I think the message from me is that we're not seeing funding for new development and construction work in real estate fall flat. Quite the opposite. It's vigorous out there.
And there are a few of the people who we both know on the call who also are looking at other things in other industries and are supportive of those industries and sophisticated enough to be able to help them work through this as well.
Yeah, that's right. And so, I mean, I've got a large, I'll just say tourism project on at the moment, which requires very substantial refinancing, and that money is there. Existing financiers are supportive, incoming money is supportive, and obviously that sort of, tourism, leisure, hotels, travel industry is heavily impacted, not just right now, but has been for months, and I think will be for months to come. So
well, you look at them, the super funds falling over themselves to try and do something with the airport.
Do you think there's a bit of a difference, or there'll be a bit of a difference between, I guess, how small business will feel the conditions going forward compared to the big end of town?
I think it's always more difficult with SME to be able to adapt to a few of these things, but some of them are more capable, and those that protect their cash position, as we've got on the slide, will be at least give themselves a chance, and they need to understand what their plan is and be able to manage all of those things. So if those who understand their business and can manipulate its way through will give themselves an even better chance to take advantage of what this is, because this, although it is a terrible scenario for a lot of people, there will be people who will be able to adapt quicker and faster and better, and they can take advantage of this sort of position to be able to expand their businesses and find the right people that they need and they're looking for.
Completely agree. I mean, for smaller businesses, obviously they might not, for instance, have the sort of cash cushion or new money options that large enterprises will have. So, you can't all be like Flight Centre and go out and raise multiple rounds of equity in order to sort of cushion yourself through this scenario. But equally, you've got other tools available to you to manage your, as Todd says, manage your cash and manage your liabilities, which is exactly the same thing that overall those really large enterprises are doing, just in slightly different ways. So, I mean, we can come on to that a little bit later in the session. And as Todd says, I should say, he's touched on a big advantage that smaller businesses have, which is much greater nimbleness in terms of decision making at a leadership / executive level, which gives you a lot more sort of speed and flexibility and evasive action that you take in the face of these types of conditions.
David, just talking about just actions that a large business has taken, which hit the papers yesterday. The footwear retailer Ascent stood down the majority of its workforce after claiming they'd run out of, I guess, the excess of the JobKeeper that they'd effectively banked from last year. So to get your take on that, and I might ask Nick, from an employment law perspective, his thoughts are as well.
Yeah, I'll shoot my mouth off, and then I'm going to hand over to Nick, who will actually know what he's talking about. No, so look, restructuring guy, I can completely see how the board of Accent made this decision, and it strikes me instinctively as being probably the right decision for the enterprise to stand down workers or close shops to the extent that it's lawful for them to do so on the worker front in order to conserve cash. Equally, I'd like to think that board is also looking very hard at a wider range of cash preservation, liability management, and cash raising options. And by that, I mean, I would like to think that they are, for instance, looking to defer any capital expenditure programs that they had otherwise planned. That they're
bonuses. What about bonuses?
I was about to say to you, I'd like to think they're looking hard at executive compensation. I think they'd be mad not to, and if they don't, they'll have shareholders and employee unions and other representative organisations baying for blood. And that'll mean superannuation fund shareholders baying for blood. So that board might have a very hard time at their next AGM if they don't do that type of thing with executive comp. I'd like to think they're talking to their financiers about what they can do around interest service and likewise around any financial covenants in their debt docs they need to manage. So as I say, Matt, I can completely understand how the board made the decision to do this with parts of their workforce, and it strikes me directionally as being right. But I'd also like to think they've got a bunch of other initiatives that they're trotting out with a fair degree of urgency, and not just stiffing the most sort of notionally flexible part of their workforce.
We're going back to ScoMo day 2 of the previous sort of shutdown, which is hibernate.
Yeah.
I mean, that's effectively what they're trying to do.
Yeah, that's right. And look, they'll probably be talking, as I say, they'll be talking to their banks. They'll no doubt be trying to talk to their landlords. That'll be a spicy conversation, I'm sure. There's a whole separate, much longer discussion about that. I mean, Nick, can I throw to you, I mean, on the sort of workforce management front, as I say, I can see how the board make the decision to the extent that it's lawful for them to do so, and the legal rights and wrongs, definitely not my bailiwick.
Yeah, I agree with everything that you said. I think the crux of the article was really trying to compare that business with other businesses that did well throughout JobKeeper and participated in JobKeeper, and some of those businesses that, handed back JobKeeper at the end of the scheme because they did well. I've got no doubt that they would have got advice as to whether or not they've got a lawful basis to stand down those staff that cannot currently work. But this idea of, excess JobKeeper is a bit of a misnomer. Presumably they were eligible to participate in JobKeeper at the time. Some businesses elected, to hand back portions of it, but there's no suggestion that they weren't eligible for it at the time. And to the extent that they're looking at what they can do with their staff, there's limited basis upon which you can stand down staff, as I mentioned. And if they want to reduce hours, they've got to do it in a particular way. But agree with what you said in respect of other measures that hopefully they are looking at that don't hurt the people that are most vulnerable in the business.
Yeah, I agree, Nick. There's this sort of message that people have been getting JobKeeper, and it's not really messaged the right way, where it's helped build up cash in these businesses to make them more resilient and encourage them to keep trading last year, even though they might have made these decisions earlier. So it's a bit of a catch-22 to be able to say, well, we've to have a go at people for accepting JobKeeper and then
it was policy
using it
made on the run, really. Like, I doing a presentation about JobKeeper the day after it was announced, and it was announced and legislated very quickly and modified after it was announced, because, you know, it was a self-assessment. You're in, and once you're in for the scheme, notwithstanding that a lot of businesses improve. So there was this concept, I guess, in the media that a lot of businesses didn't deserve it. That might be right emotionally, but certainly from an eligibility objective perspective, those businesses were lawfully entitled to participate. And we don't have JobKeeper at the moment. What surprises me most about the current policy, I know there's such resistance not to go back to JobKeeper, but the framework and the infrastructure was there. And now we're doing another presentation about, you know, state and government grants that all have confusing eligibility criteria. It just surprises me that they could have, you know, recast it as something else, but use the existing framework just so businesses can get on with doing business and not have to get advice and pay for it about how to be eligible for some of these new grants.
But anyway, so look, Matt, I think for this audience, you know, centering on the construction and real estate sort of industries that have been closed down temporarily, I think, yes, it makes sense to be looking at managing all of your expenses, including your labour expenses, which are no doubt a very significant item in the P&L. But experience tells you don't just, you know, roll out one initiative. You've got to look at what you're doing across the profit and loss side of the situation. And I'm sure that Accent, you know, they're a large, sophisticated corporate.
So Todd, can you just take us through, you know, the importance of understanding your cash position and your financial position generally? Just when you're looking at uncertainty, you know, in times like this, and why cash is so important.
Well, thanks, Matt. That comes back to one very clear thing. If you have cash, you can use it. If you don't have cash, you have an incapability to be able to negotiate or do anything. So you run out of options. So protecting your cash position, understanding what your cash position is primary here. I think the other focus here is also paying in wages and making sure that your employees stay with the business to be able to keep the business together and hold it together to be able to trade back out if and when, and timing wise when this happens. My feel at the moment is that it's almost a holding brief to 31 July to see what happens, and then have a look beyond that. If you have an understanding where your cash is, you understand what you absolutely need to pay to be able to keep the business together, then you can start to make decisions. Without that information, you're guessing, and you're potentially putting out fires that could create larger issues down the track, because this is protection mode. It is about protecting your business, your employees, and your investment in that business. And that is the way it is. Otherwise, you can run the risk of breaching obligations. You can run the risk of creating more damage. And the biggest issue of all of that is you might not be able to resuscitate the business once things come back out. There are some other issues that come out of that, which I'm sure David will probably take us through, or that get triggered in these sort of scenarios as well, that can generally get fixed by cash if you have it, but may not.
Yeah, spot on. I mean, to jump in, Todd, if you're you know, in the construction game, everyone involved will be familiar with you know, delay, liquidated damages issues for not being able to finish off projects on time, and obviously for some people that's going to now be an issue with the close down. My advice there is, you know, look at what contractual options you've got around force majeure clauses and the like. You know, you'd like to think that a well-drafted force majeure provision might well kick in and give you some breathing room around avoiding LDs. Likewise, for other larger projects, you know, have a look at whether or not there's a sort of broader project control group type machinery in the development or construction documents that might provide some latitude in that sort of control group scenario to again push out key dates and help you as a contractor sidestep LD's obligations. And as I say, more broadly, start looking at having sensible negotiations with your principal or your head contractor around rescheduling timetables and looking to avoid that sort of LD's liability or other negative consequences. So, you know, nasty default or termination triggers that might come up if it looks like you're going to miss a key milestone or delivery date.
And the other issue that kind of arises out of that is that this almost the subbies gain strength in this position because they have the warranty position that the head contractor needs.
Yep.
So it's almost like the banking sort of position. If it's a person is too far underwater, it's not the person's problem anymore; it's the bank's problem.
Correct. So, and that was the next thing. You're completely taking the words out of my mouth. Is putting to one side what the legal documents may or may not say. I mean, it's the sort of environment where in the game, Todd, that you and I are in, that the documents are great, but talking about commercial realities in terms of for a head contractor or a principal maintaining a workforce around a big project, there's going to be latitude, and you know, that comes down to just effective communication, both upstream with your head contractor or principal, and also downstream in terms of looking after your own subcontractors and helping them through. It's a small market, and picking up something Nick was talking about, it's a tight labour market, right? I know that from our own business. And so I think there'll be some latitude given. For completeness, it's worth mentioning, consider if you've got any insurance coverage that's responsive here. Off the back of this recent High Court decision, you might well find that if you've got business interruption coverage in an industrial special risks policy for the business, there might be something there. I don't think you're going to see that as a short-term source of liquidity, though. You know, the insurers are not going to be paying out those business interruption pandemic claims anytime soon because they're complex policies, and it's a big market and a big issue for the insurers. But just keep that in mind in terms of talking to your insurance broker about that possible source of cash in the future. And then, look, I just think, picking up something that Todd and I have just been talking about, having effective communication with your stakeholders, so your employees, your suppliers, your customers, your funders, at the moment, so critical. And don't forget the ATO, who are often, of course, a pretty key stakeholder and creditor.
The largest bank in Australia.
That's right. Just communicating with them and actually giving priority to that communication in your business. Don't push it off. Yeah. Don't focus on doing other things. I think communicating effectively with your stakeholders is top priority at the moment.
Yeah, I think there's an opportunity to take advantage of the uncertainty right now to be able to go positively and say, we have a plan, but we need you to waive this or say that we're not going to have to pay you for 3 months and we'll come back to you after that. Because I think 3 months is a reasonable period for things to stabilise or become more clear. So there is an opportunity there to be able to maximise that and buy yourself time to. And the banks have already coming out and saying whatever you need, we'll probably pretty much do it. The ATO, I suspect, will be very passive as well. So there's flexibility there that can buy you a lot more time and buy you the opportunity to be able to focus on getting your employees paid and then resetting all of these contractual sort of structures. Yeah,
that's right. I mean, the rule of thumb is that, isn't it, Todd, is that generally speaking, going early to a stakeholder, whether that's a principal or a head contractor or the ATO or your lender, going early generally makes it easier to solve the problem than leaving it fester.
Particularly if you're consistent, right? You treat them all the same way.
Yep.
What should management directors, I guess, do if they're concerned about their financial position and, concerned about the consequences of possibly, personal exposure from insolvent trading?
I'm going to say two things. One is think about the safe harbour from insolvent trading. I'm not going to bore you all with the detail of it, but broadly speaking, it involves having a plan to do something better with the business than simply putting it into insolvent administration or liquidation, tomorrow. And the two things that, just really stripping it back, you need to do, and this is why Todd mentioned it earlier, you've got to have your employees paid current. That doesn't mean all of their accrued leave and so forth. That just means their, regular entitlements. You've got to pay them current, including their super.
Can I ask you a question without notice? I looked at this the other day, not in any detail, but you may know the answer to this. In circumstances where you've lawfully stood down staff, which for the purpose of the legislation means that you are not required to pay them, would you fall foul of those safe harbour provisions, or would you be covered? I would have thought that you would be covered because you don't have a lawful obligation to pay them.
Off the top of my head, yes. Yeah. Agree with you. But so make sure their salary and so forth is current, and in particular their superannuation. Don't use their superannuation as a piggy bank. And the other one is make sure that your tax, talk to Peter Bardos, make sure that your tax lodgements are current. You don't have to have your tax paid current, but your lodgements have got to be current. So your BASs and income tax returns and so forth. And then picking up from that, though, is be very clear in your communications with the ATO about where you're at with your tax account. Why? Well, because while not having your tax paid current won't take the safe harbour from insolvent trading away from you, of course, if you've got unpaid taxes, then the tax office might get you with a director penalty notice, and that starts getting nasty very quickly as well and lifts the corporate veil. So hence Todd and me banging on about being pretty clear with your communications with the tax office.
And you can create a preference position and they can come and chase you later on anyway. So it is complex in there. And the best way to deal with them at the moment is, pay employees, first of all, and get a deal with the ATO where they just leave you alone for 3 months while you keep doing your lodgements, and the bank on the same basis. And the bank might even be able to just waive interest and you just accumulate that because you just need to take a breath and understand where you're at.
Yeah, but I can tell you, Matt, if the team on this call, if you're doing a good job in managing your liquidity, managing your cash inflows and outflows, then the right answer is, generally speaking, to look at using the safe harbour and not preemptively going into voluntary administration or liquidation. That would be, in my view, dangerous.
It destroys value. As much as we like earning fees on doing those things, I think it is better to be able to restructure and resuscitate and bring things around, particularly those businesses which the only issue with them is the pandemic.
Yeah.
Thank you, David, Nick and Todd. That was very informative. We'll move on. Just as we finish up and we get to questions, part of what we'll send to everyone that's been on this webinar shortly after, maybe tomorrow or early next week, we've got a HOE traffic light review, which is just a very short 2-minute review, just so management business owners just can assess their financial position as they are now. It's not meant to be, all-encompassing review. It doesn't really deal with a lot of balance sheet issues that a business may have, but just to identify, if there's anything that really you need to think about that could be urgent, that possibly, taking advice from a solicitor or accountant or other advisor may be beneficial to you. So move on to it. So I'll just move on to questions. It looks like, Pete, you might be popular in this regard.
As expected. Thanks, everyone.
I'll start off with some of the smaller ones just to get through them, so I'm conscious of time. So Taylor asks, how do monthly billers determine a decline over 2 weeks? Do we have any clarity on that one?
Good question. Probably only that it's a minimum of 2 weeks. So you could look at a longer period within that time frame, but conscious that it's not a full month there.
And Pete, one of the things we learned from last year is actually document what you did and why.
Yeah.
Because the HA might come and ask for it. Yeah.
And I've got no doubt that Service New South Wales is going to be pretty generous about just giving this money out and be ready for a review.
Mariana asks, is anything available for businesses over 50 million? And is it aggravated turnover?
Thanks, Madison. Certainly 50 mil seems to be where they're drawing the line in the sand for this New South Wales government support, either 50 mil turnover or 10 million of Australian payroll seems to be the key thresholds there. So you'd need to look outside what's currently there. There's lost carryback measures that I mentioned before. I believe they're available for companies with turnover up to 5 billion. And various other concessions that are still around from from previous budget announcements, I think. Sorry, aggregated turnover, yes, it is. It's quite interestingly worded, but clearly it's a state government office not used to these sort of concepts, and it's borrowing from the tax office.
Another turnover question. Christopher asks, is turnover based on cash or an accrual basis?
So again, it's New South Wales borrowing from the tax office. They say it's the GST definition. And I think the message is whatever you're using to prepare your BASs and your GST, use that. If you've changed it again, the key is to compare apples with apples. So just make sure you're consistent.
On the payroll tax reduction question, Mark asks, is the 25% payroll tax reduction in relation to the full year, I think FY21, or for each month going forward during lockdown this year, FY22?
I'm not sure we know, to be honest. I guess I don't know. So more information is meant to be at the end of August 2021. How I read it was that it was for the full year, but it certainly seemed pretty generous, I guess, if the turnover reduction is just for a specific period. So,
another question here is, do you think the not-for-profit turnover income will be calculated like last year? Will exclude government grants like it did in the JobKeeper calculations?
Certainly had a bit of fun taking out and putting back in those sort of things when we were doing JobKeeper. I think it comes back to we've got a framework of JobKeeper and why aren't we using it? But the answer is I don't know. At the moment, decline in turnover is using the GST concepts, which is what JobKeeper was also doing. I suspect the need that the JobKeeper legislation had to carve out government grants is that it would otherwise have been included. So the conservative view, I think, would be to include it until we have more clarity. Again, I'd just say these are open until September, and maybe we could let some of these teething issues fall out.
What happens if you're an accounting practice or a service business like that and you're down 30%? How do you get an independently signed accountant's letter? That's quite a good question for HLB.
Good question. Ask one of your friends, I think. So there's a definitions section in these guidelines, and I was trying to pull it up. I don't have it in front of me, but it can't be an employee or an associate of the entity with the decrease in turnover. So I don't think you'd be able to sign it. So ask a community member.
Okay, well, some of the other questions, sorry if we didn't get to them, but we will come back to you specifically and try to answer those questions for you. We're just finishing up. Everyone's contact details are here and they'll be forwarded to you following the webinar, so you have them if you have any questions, or you can also contact Kim from our office, who can direct you to the various panelists or someone else within the organisations who can assist you should you have any questions. And to just finally, we do have our last polling questions, whether or not you would like a representative to contact you in respect of what we've discussed today in the webinar. But we are always available, should something come up in the future that you need advice. So I'm happy to assist. So I would like to thank everyone for coming. And as I said, there'll be a link to the webinar, so you can listen to it or forward it on. We'll provide a more detailed presentation that has probably more of the content that we discussed today, as opposed to what the slides you saw. as well as more resources from our website around the government support initiatives, the traffic light assessment, and more information about the presenters. So thank you very much. I appreciate and we thank you for giving your time today, and good luck, and I'm sure we'll speak to you soon.